Financial Wallet Academy, where we educate you about finance. Hey there, and welcome back to the channel. If you've ever wondered how people build wealth through real estate, one of the first concepts you need to understand is the investment property. Today, I'm going to walk you through what an investment property actually is, why people buy them, and step by step how you can start finding your first deal. Let's start with the basics. An investment property is any real estate you purchase to make money instead of living in it yourself. That's the simplest way to put it. Some people buy houses to flip them, meaning they renovate and resell for a profit. Others buy properties to hold them long-term and collect rental income every month. The key idea here is this: an investment property is a tool for building cash flow, equity, or both. Here are a few common examples: a single-family home you rent out to tenants, a duplex or triplex where you rent each unit separately, a small apartment building, a condo you use as a short-term rental. When you own an investment property, you're acting as the landlord, which means you also take on responsibilities like maintenance, repairs, and screening tenants. Why people buy investment properties? Let's talk for a second about why investors do this. The main reasons come down to three big benefits. Cash flow. This is the rental income you collect every month after expenses. Good cash flow helps you cover the mortgage and put money in your pocket. Appreciation. Over time, real estate typically goes up in value. When you sell later, you can profit from that growth. Tax advantages. Depending on your situation, you may be able to deduct expenses, depreciation, and sometimes even defer taxes with strategies like a 1031 exchange. Some investors focus mostly on cash flow, especially if they want income right away. Others are more interested in long-term appreciation. Most people look for a balance of both. How to start looking for an investment property. Alright, now let's get into the part everyone wants to know. How do you actually find an investment property? It starts with getting very clear about your criteria. You want to define exactly what you're looking for before you ever start browsing listings. Think about your budget and financing, the type of property you want, the neighborhood and tenant demand, your target cash flow or return. For example, are you looking for a turnkey rental you can rent immediately, or a fixer-upper you'll renovate? Do you want a property close to home, or are you open to investing in another city? Where to find properties? There are a lot of places you can look. Here are some of the most common strategies. Multiple listing service. This is where most listed properties end up. You can search public sites like Zillow or Realtor.com, or work directly with a real estate agent who has MLS access. Off-market deals. Not every property is listed online. Some owners prefer to sell quietly. You can find off-market deals through networking, direct mail campaigns, or by building relationships with wholesalers. Foreclosures and auctions. These can offer opportunities to buy below market value, but they also come with more risk. Make sure you do thorough due diligence. Driving for dollars. This simply means driving around neighborhoods you like and looking for vacant or distressed properties you might be able to purchase. Online marketplaces. Sites like LoopNet, Roofstock, or BiggerPockets Marketplace focus specifically on investment properties. Evaluating a potential deal. Once you find a property, the next step is to run the numbers. This is where a lot of first-time investors get tripped up, because it's easy to get emotionally attached to a property without checking if it's really profitable. Here are the basic things you need to look at: purchase price and closing costs. How much will you need upfront? Estimated repairs. If you're buying a fixer-upper, get multiple quotes. Projected rent. Look at comparable properties in the area. Monthly expenses. This includes mortgage, taxes, insurance, property management, maintenance, and vacancies. Cash flow. What's left over each month after all expenses? Cap rate and return on investment. This helps you compare deals objectively. Always analyze the numbers conservatively. It's better to be pleasantly surprised than disappointed. Tips for first-time investors. Here are a few extra tips if you're just getting started. Work with an investor-friendly realtor. Not every agent understands rental properties, so ask if they have experience with investors. Start small. Many successful investors begin with a single-family home or a duplex before moving on to larger buildings. Build your team early. You'll need a lender, property manager, contractor, and possibly an attorney. Don't rush. It can take time to find the right property. Be patient and stick to your criteria. Keep learning. Real estate investing involves a learning curve. The more you educate yourself, the more confident you'll feel. So to recap, an investment property is simply real estate you buy to generate income or build wealth over time. You can find them through public listings, off-market connections, or even by driving your target neighborhoods. The key is to define your goals, stick to your criteria, and always run the numbers carefully before you commit. If this video helped you understand the basics, give it a thumbs up and consider subscribing for more real estate investing tips. And if you have questions about finding or evaluating investment properties, drop them in the comments below. I'm here to help. Thanks for watching, and best of luck on your investing journey.